Welcome. Thank you for joining me today about how we're going to actually talk about how cryptocurrencies work, why Bitcoin has value, and how to actually get started in buying cryptocurrencies. And by the end of this presentation, you should have a baseline fundamental knowledge of what this thing is, where to get more resources, and how to get involved. So here's the table of contents for this presentation. We're going to essentially get started with who am I, why am I qualified to give this presentation, what is Bitcoin, how does it work. We're actually going to walk through a Bitcoin transaction and walk through every step of the process, and we're going to talk about how and why it works. Number 4 is a really important one because it's unclear why Bitcoin has value if you just look at it initially. Bitcoin actually has real world implications for why it actually has value and why the value keeps going up. We're going to talk about number 5 is how to store Bitcoin. There's about 4 different ways to store Bitcoin. You can store them on cryptocurrency exchanges, which is the least secure way and highly unrecommended. You can store them in wallet providing services. And then number 3, you can put them in what are called hard wallets. We're going to talk about what that is. And you can actually store Bitcoin on a piece of paper. So we're going to talk about number 4, which are paper wallets. After that, we're going to be talking about why to use Bitcoin, why not to use Bitcoin, and then finally we're going to get into how to buy Bitcoin. So number 3, or to get started, who am I? Who is Nils? I am a Discord boomer, meaning that I am 30 years old. And I got clapped up in the Bitcoin boom in January 2018. Literally, everybody at work was talking about Bitcoin and cryptocurrency. At the time, Ripple had just come out. So there's Bitcoin and then there's altcoins. Altcoins are alternative cryptocurrencies. So essentially, I lost about maybe $3,000 to $4,000 during what we call the crypto winter between the crash in January 2018 and about May of this year when the Bitcoin halving happened. We're actually going to talk about what is the Bitcoin halving. Those are landmark events in Bitcoin's history that drive the price going upwards in Bitcoin, and that's the reason why it has value, these Bitcoin halving events. With that being said, I'm a software developer by trade and by profession, and I'm a very enthusiastic investor. Most of you guys know me from being a co-club captain of the Get Money Club, and it's an outlet for me to be able to talk about my investing forays. So what is Bitcoin? Bitcoin was released when it was released is really important. 2009, which was the year after the Great Recession in 2008. So it had amazing timing essentially. Like you had. At the time, I was graduating high school. I graduated high school in 2008, and when I went to college, like the Occupy Wall Street protests were happening. A lot of the whole everybody was angry at the 1% of society that control 40% of all assets in society, which is a true statistic. And you had the Occupy Wall Street protests going on, and Bitcoin came out at an insane time when people were looking for alternatives to the central banking system, which was literally very few people. So many people lost their jobs and so much money was lost during the Great Recession, but very few people went to jail. Like less than 20 people were convicted and went to jail as a result of the 2008 financial crisis. So there's a reason why Bitcoin has so much hype behind it, is because people wanted an alternative to supporting these big banks who were getting bailed out, and no one went to jail after the Great Recession financial crisis. So essentially, you can actually read the white paper, which is we're going to go to the Bitcoin. This is GitHub itself. GitHub is the place where code lives online. It's like a social network for coders. We are actually looking at the open source repository for Bitcoin. Like this is it. It's just like all Bitcoin transactions in existence are publicly available information. The code base for Bitcoin is also publicly available information. So we're going to actually read what is Bitcoin right from the source. Bitcoin is an experimental digital currency. So it's literally money. It's digital money. It enables instant payments to anyone, anywhere in the world. Bitcoin uses peer-to-peer technology. So if there's any other boomers in the chat, you remember when BitTorrent was a big thing. You know, you would go and log into BitTorrent, you would download like Naruto episodes. This was me when I was like 15 years old, when BitTorrent was at its zenith. So essentially, peer-to-peer means that when a Bitcoin transaction is conducted, like all these computers live on this one network, and we're going to actually talk about this in particular, but the Bitcoin miners, what they do is, like, say I wanted to send 1 Bitcoin between me and Monkey, right? Monkey's always wants people to send her money, so this is a relevant example. I figured you were going to respond, Monkey, but I think I'll just keep going.
Right, like, I have a PayPal.
Right. Support Monkey's Patreon, PayPal. Anyway, so say I want to send a Bitcoin from my Bitcoin wallet to Monkey's Bitcoin wallet. There are people who are just literally sitting on the blockchain. So the blockchain, gosh, I'm getting too much into the details before we've discussed the foundation. But essentially, the blockchain is the unalterable collection of all Bitcoin transactions in existence. So the blockchain, the reason why this is revolutionary technology is literally you can go back in time. You can download every single Bitcoin transaction in existence. You can go back to Bitcoin transaction number 1. You can see what address sent how much Bitcoin to address number 2. So the way it works, and the reason why it's a decentralized technology, and the reason why it's such a big deal, is because you don't need, there's no direct middleman. Like if I'm trying to send like money via PayPal to Monkey, I'm going through PayPal, and PayPal takes a certain percentage, and I have very little control over who gets that money. But Bitcoin, there are people who are called Bitcoin miners on the blockchain. So say I want to send 1 Bitcoin from my wallet to Monkey's wallet, there are people on the blockchain that they swarm on my transaction, and they try and they're incentivized to encrypt my transaction and transfer that Bitcoin, because they actually get what's called proof of work. So this is the Bitcoin white paper. You can actually go to bitcoin.org, bitcoin.pdf, and it's like a 9-page, essentially a 9-page manifesto of what Bitcoin is. And what I'm talking about right now, and the reason why Bitcoin is such revolutionary technology, is there's this proof of work concept, where these miners on the Bitcoin blockchain, they come and they encrypt my transaction. They verify that I'm who I say I am, and I have the Bitcoin that I want to send to Monkey. Then they confirm that Monkey has a legitimate address and can receive my Bitcoin. And then they encrypt the transaction, publicly release it on the blockchain. And so that 1 Bitcoin goes to Monkey, and then that miner, they're incentivized to do that because a small little bit of Bitcoin is created, and they get that brand new Bitcoin that was created as a result of that transaction. This is how Bitcoin works, and the reason why it's such a big deal is because it's digital money and it's not controlled by any one person. And all these transactions, literally, you can. So here's the website bitcoincore.org. This is the website for the Bitcoin code base. That's this code base right here, which is public and open source. You can legitimately download the blockchain. You can download every Bitcoin transaction in existence. And here's the interesting part right here. Bitcoin Core requires a one-time download of about 400 gigabytes of data, plus a further 5 to 10 gigabytes per month. This is the interesting part, the 5 to 10 gigabytes in addition per month. The reason why is because you're going to be downloading every transaction on the blockchain. As new Bitcoin transactions happen, the amount of data needed to download Bitcoin, of course, increases, because every transaction in existence is stored on the blockchain. So with that being said, transactions are carried out on the Bitcoin blockchain, and new Bitcoin, a small amount of new Bitcoin, is rewarded to the miners who actually encrypt those transactions. So we're going to actually walk through a Bitcoin transaction right now, which is number 3. How does Bitcoin actually work? Say your name's John, you'd like to buy a coffee from an online coffee or Bitcoin-based coffee shop, and you want to pay for it with what's your quote-unquote Bitcoin wallet. So here's what your Bitcoin wallet is. A Bitcoin wallet, all it is a collection of just strings. Strings are like a collection of letters and numbers. This is like a programming concept. It's just a collection of letters and numbers. So your Bitcoin wallet is your address online for where your Bitcoin is stored. So when that transaction happens, a Bitcoin wallet is a collection of Bitcoin addresses and private keys controlled by the software. So my public address, say we use my name, Nils, right? That might be the name of my Bitcoin wallet, and then I'll have a secret key for, like, say my password, right? Say my password's password. That's my private key. Of course, that's a terrible password. We all know that. So I've got this private password, and I've got my public address. My public address is Nils, and then I've got this private password. And say I'm trying to send money to Monkey. Monkey, her public address is Monkey, and then she's got her own password. So we'll just call that Monkey's password. So a private key is a 64-character cryptographic hash. That's an extremely complex concept. That's a complex set of words. All it is just a password. Like that's the layman's term for it. You've got your public address of where your Bitcoin address exists, and you've got a password, and this is how you confirm that you're the person who actually has the Bitcoin, and you confirm that you're the person who's going to receive the Bitcoin. So when John says, hey, I want to buy some coffee from Bitcoin Coffee, John logs into his wallet on his phone to create a transaction, and then he sends money to the address for the Bit Coffee company. He sends his Bitcoin there, and then on the network are those miners, right? Those miners are sitting on the blockchain, and they're incentivized because they get a small piece of Bitcoin to, oh snap, John wants to send some Bitcoin to Bit Coffee. Let me go and verify this transaction. John, are you who you say you are? Do you have the Bitcoin that you say you have? Bit Coffee, is this your legitimate address? And then they encrypt that transaction, publicly release it on the exchange. Now, once it's done, once it's on the blockchain, that means that John has sent his Bitcoin to Bit Coffee, and the miner, for being the middleman that he was, he gets a small amount of Bitcoin created as a result of conducting that transaction. And that's what this is right here. That's what this slide is. The transaction is sent to the Bitcoin miners who maintain the network. Once they've received it, the transaction is confirmed, and John has successfully transferred Bitcoin to Bit Coffee. So we're going to talk about why Bitcoin has value. It actually solves a need. Like literally, you and I could be carrying millions or billions of dollars in Bitcoin in our wallet, and it's safe and secure because you need that private key, you need that password to be able to transfer it. So Bitcoin has value because coins are birthed based on computational power. When those miners swarm on your transaction on the blockchain, like they have to solve an algorithm. This is described in that Bitcoin white paper that I was talking about. If you go to bitcoin.org/bitcoin.pdf, that whole proof of work thing is described. It's just a 9-page PDF if you want to read it. So let me post this in the chat. I'm going to post all these things in the chat. So here's the Bitcoin white paper. Let me describe it. Bitcoin white paper. Here's the Bitcoin code base. And here is where you can actually download the entire blockchain. And remember, the blockchain is a cool word for all it is just a collection of Bitcoin transactions. That's all it is. The blockchain is all the Bitcoin transactions that have occurred in existence. So Bitcoin has value because when those miners are verifying that transaction, it requires computational energy because they actually have to encrypt and decrypt the transaction. What's interesting about this is as the blockchain expands, it actually takes more and more computational power to conduct transactions. And it's a double whammy. The reason why Bitcoin went from like 3 cents for a Bitcoin to now being 40,000 per Bitcoin is because there's 3 concepts at play. Number one, Bitcoin is like gold because it's scarce. There are only going to be 21 million Bitcoin created. And just side note, you never actually put the S on Bitcoin. you always just say Bitcoin. You don't say Bitcoins. Like, you're going to sound like an idiot if you're talking about Bitcoin and you say Bitcoins. I bought 10 Bitcoins. No, that's not how you do it. It's, I bought 10 Bitcoin. So, side note. Anyway, so there's three reasons for why Bitcoin has value. One, actually it's four. One, it actually requires computational energy, computational power. Computational power is a derivative of like the reason why I have lights, right? It's from like a coal power plant or a nuclear power plant, which all derives from the sun's energy. All this stuff, like, it requires real energy. One. Two, it has built-in scarcity. There's only going to be 21 million Bitcoin created for the entirety of the Bitcoin mining. Number three, as time goes on, the reward, like the miners, as the miners are mining and creating new Bitcoin for conducting transactions, their rewards, that proof of work concept, they get rewarded less and less Bitcoin as time goes on. Number four, they get rewarded less Bitcoin, and yeah, so they would get rewarded. Number three, they get rewarded less Bitcoin. Number four, it becomes more difficult to mine Bitcoin. It requires more computational power. So for those four reasons, over time, Bitcoin becomes more valuable because Bitcoin is inherently scarce. It maps to a real-world energy concept because it requires computational power, and computational power requires real-world energy. Number three, the miners who conducted transactions on the blockchain, they get rewarded less per transaction as time goes on, and we're going to talk about that next. What is that concept? Why do they get rewarded next? And number four, so they get rewarded less, and it requires more computational power to conduct a Bitcoin transaction. So we need to talk about the Bitcoin halving. This is the heart and soul of why Bitcoin is worth $40,000 today. So there have been 4 Bitcoin halving events in the history of Bitcoin. So we're going to take a look at this. So the Bitcoin halving events, this is the heart and soul of why why people say Bitcoin is going to be worth $1 million one day. I'm getting hot. I'm getting hot talking about this stuff. It's exciting. Like, I'm excited. The reason why I'm so excited is because a lot of people like hear about Bitcoin and why does it exist and why does it have value, and but you guys are actually going to understand fundamentally why it has value. So this shirt says college on it. I'm not in college, just by the way. Anyway, so there have been 4, or maybe it was only 3. So there have been at least 3, according to this chart, Bitcoin halving events. Bitcoin halving events, those are the events written on the blockchain when the miners get half of the reward of the previous era. So that's what this is. See how in the image it says block reward from 50 to 25, block reward from 25 to 12.5. So miners reward, I don't know what 6.25 means, but literally Bitcoin miners were getting paid almost 10 times. 2 halving events before, they were getting 10 times the Bitcoin that they're getting now. So essentially you have a scarce concept in Bitcoin where you're getting less reward over time, and that's the reason why the price of Bitcoin is going up, because it's getting harder and harder to mine Bitcoin, and yet there's still the same amount of Bitcoin. And so that's why it's an inflationary concept. It inflates the price of Bitcoin because it becomes more valuable because it's still the same amount of scarcity and we're getting less and less Bitcoin over time. With that being said, let's move on to the next one. This is the chart that we were just looking at, the halving events. The halving events are the heart and soul of why Bitcoin is increasing in value over time. The last halving event was in May 2020. So it's now January 2021, and historically, every time there's been a halving event, Bitcoin's price has skyrocketed because it's become more scarce to mine Bitcoin. So with that being said, I hope you understand, 1, what is Bitcoin, why it's valuable, and how Bitcoin transactions work. So the next thing we're going to talk about is how to actually store Bitcoin. So you store Bitcoin in 4 different ways. You can store them on cryptocurrency exchanges. That's how you can. In the world of cryptocurrencies, Bitcoin is the gold standard, but there's all kinds of other ones. There's Litecoin, there's Ethereum, there's Dogecoin. There's thousands of cryptocurrencies, but And that's what these cryptocurrencies allow you, these cryptocurrency exchanges allow you to do. They allow you to transfer from Bitcoin to Litecoin, and from Litecoin to Ethereum, and from Ethereum to Ripple, and all these different things. So I've used multiple exchanges, but these are the ones I would recommend. I would only be able to recommend from my own experience, and the exchanges that I think are very valuable are Coinbase, which is an American-based crypto exchange. And Coinbase is how you actually can convert your fiat currency, whether that be the euro, the dollar, the pound. You can convert fiat to cryptocurrency. So you can literally turn your dollars into Bitcoin. Binance is a crypto-only exchange. So literally you have to arrive with Bitcoin. Was somebody going to say something?
Yes, question. What is fiat?
Fiat means like, actually I don't know what it means, but it's like real world currency. Like United States dollar, Great British pound, Australian dollar. So fiat meaning like actual paper money. You know? Yes? No? All right, interrupt me again. Oh, what's up? Was that legit?
That makes sense.
Okay, yeah, those are the fiat currencies. So you need to be able to enter into the crypto space, and I think that the most secure way to do that right now is via Coinbase. I like Coinbase. I use Coinbase, and I use Binance. With that being said, crypto exchange. So say you're a Bitcoin maximalist. A Bitcoin maximalist is somebody who believes in the long-term value of Bitcoin as a long-term storage of values. A long-term storage of value is something like gold, silver. I think that Bitcoin is in that class due to its built-in scarcity and it has actual real-world value. Like gold doesn't actually have real-world value. Like it's just because it's shiny, right? Like Bitcoin, actually you can transfer it easily between anywhere in the world. So I think it's more valuable than gold, but that's another story. But all that being said, if you're a Bitcoin maximalist and you just want to buy Bitcoin at 40,000, you're like, oh, I know my Bitcoin's going to be worth $400,000 one day. I don't know what it's going to be. I know that, but this is my belief. My belief is that Bitcoin will always retain its value over time. But say you want to store it for a long period of time. You don't want to store it on these exchanges. These exchanges are historically getting hacked all the time. There's Mt. Gox, MTGOX. This is the historic Bitcoin hack where millions of dollars were lost. This was the first great Bitcoin exchange. I mean, it's pretty much dead now, but your Bitcoin is not safe on an exchange. And I mean, there's these wallet services too. I mentioned these wallet platforms. I actually wouldn't recommend them either. The only thing I can legitimately recommend is a hard wallet. So I actually pasted this link of someone hacked the Ledger. So the wallet that I would recommend and I personally have is the Ledger Nano S. So the Ledger platform, this is a French company that makes these hard wallets. So these hard wallets, essentially, to conduct a Bitcoin transaction, all you need are three things, which is your public key. Your public key is your Bitcoin address. Your private key, that's the heart and soul of it. Like, that's what you want to protect. Your public key is public. Your private key is private. Your private key actually confirms that you are either sending Bitcoin or receiving Bitcoin. These hard wallets allow you to receive from the network your Bitcoin transaction, but you literally can disconnect it from the internet, and essentially it effectively makes it unhackable. So the Ledger company was hacked and they got a bunch of email addresses, but literally no money was lost because everyone has a unique public and private key. This is the most secure way to store your Bitcoin, is to have something like a hard wallet like this. You don't have to use the Ledger. You don't have to take my recommendation. With that being said, there's also the paper wallet option. Say you're like, dude, I don't trust anybody. Literally, you can download Bitcoin Core, you can create a public and a private key, and you can write it down on a piece of paper and put it in a security deposit box in the bank. So that could be a way that you choose. I don't recommend it because literally if somebody has that, like literally that's the keys to your kingdom. Like that's the key to your bank account. That's your online identity in terms of Bitcoin. So this is how you store Bitcoin long term. So there's the exchanges, There's wallet platforms, there's the hard wallets, and then there's the paper wallets. Finally, we're going to go into the final three parts of this presentation, which is why you should use Bitcoin, why you shouldn't use Bitcoin, and then how to buy Bitcoin if you choose to buy it. So the reason why you should buy Bitcoin is, remember, the Bitcoin was released on the backs of the great financial crisis in 2008 that was caused by the big banks, and they literally they got bailed out as a result. Like, they literally got money. They screwed us all, and they got money as a result. So with Control, like, it's a decentralized asset. Like, there's no middleman. Like, literally everybody on the blockchain can contribute to Bitcoin. You can mine. You become a Bitcoin miner. You can create your own exchange in regards to changing Bitcoin to Litecoin. It's for the people. There's the number two, freedom. Like, it's essentially you're contributing to, like, the changing of the world from, like, the power to the few to the power to the many. Number three is privacy. So especially in the United States, there's a concept in the United States called Know Your Customer. When you open a United States bank account, you actually your identity has to be tied to that bank account. With Bitcoin, that is not the case. You actually this is why Bitcoin is very popular among, like, doing drug deals, selling weapons online, like the dark web. A lot of it is done in cryptocurrency because many cryptocurrencies don't actually map your Bitcoin identity to your real world identity, so it's private by default. With that being said, number four, there's very low transaction fees when you transfer Bitcoin. Like, if I were to, like, my brother sent me like $3,000 recently, and on PayPal, he sent me $3,000, and PayPal took $90 out of there. So that's what, 3%, right? 3,000. Yeah, they took 3% from that transaction. My freaking own brother just giving me money. But with something like Bitcoin, as time goes on, those Bitcoin miners get less and less Bitcoin. So as you use it and these Bitcoin halving events happen, the transaction fees are become less and less. So Bitcoin is great because it's decentralized. It gives power to the people. It's private by default. There's low transaction fees, but there are some serious disadvantages to Bitcoin. It's a very volatile security. It's worth $40,000 now, but 6 months ago it was worth $4,000. It was worth 10 times less 6 months ago. And someone like me, a boomer like me, I literally got caught up in it. December 2017, I was chilling. I was buying Bitcoin at 15,000. Woo, it was great. Friggin' January, it went up to 20,000 and it just crashed all the way down to 3,000. Everybody was like, This current Bitcoin boom, I don't hear anybody talking about it. Nobody's talking about it because all the dumb money is too scared at this point. Only the smart money is making money. Like, I actually put a text chat in Get Money Club today. I said, who's getting paid off of this Bitcoin boom? Nobody. Nobody's getting paid because everybody got screwed in the first one. They realized that they were the dumb money, and then the smart money is the hedge funds of the world, the people who actually understand what Bitcoin does, the people who actually read the Bitcoin white papers, who look at the Bitcoin code base. Those people are the ones who made money during this boom. So the disadvantages is businesses worldwide still are not accepting Bitcoin to a large amount, but that's increasingly changing. Recently, the first NFL player came out and is getting his entire salary paid in Bitcoin. It's volatile. It's a very volatile asset. It was worth 10 times less 6 months ago. It's now worth 40,000. Exchanges. Your Bitcoin is not safe. Like, this is not especially in the United States, all bank accounts are federally insured. Where $250,000 of your money, if the bank goes bankrupt, literally the United States government backs your money and will give you that money back. That's not the same case with Bitcoin. Like, literally, there's probably hundreds of thousands, if not millions, of Bitcoin that are lost to the sands of time because people have them in a hard wallet, like that Ledger Nano, and only they knew what was the password to unlock their Bitcoin, and they died, right? They don't know. No one knows how to get access to their Bitcoin that's on their wallet. So that's also, in my mind, that's a reason why you should invest in Bitcoin, because over time, like, you can't you can't get it back. Like over time, there's going to be millions of lost Bitcoin. So with that being said, it's also a legal gray area. There's no security. If you get hacked and you lose your Bitcoin, it remains the wild, wild west of the internet. Like you're not. There's no safety net. This is. Man, I was going to go for an adult reference, but I realized this is a not an adult channel, so I censored myself. Essentially, you got no protection when you use Bitcoin. It's the wild, wild west of the internet. With that being said, I'm a Bitcoin maximalist. I think it's worth investing in. For my suggestion to buy Bitcoin, I would just say go to Coinbase. I've used Coinbase. I recommend it. They do have large transaction fees to initially get in. I think they charge you like 4% for that initial transaction. It's huge. But I feel safe using it, and literally you can transfer that you can transfer your Bitcoin from your Coinbase wallet to your hard wallet, that's my recommendation. If you're going to buy Bitcoin, you're like, I'm just going to hold this for 20 years, not think about it. I recommend putting it in a hard wallet and throwing it in a security deposit box at your bank. So with that being said, this is how cryptocurrencies work. With this presentation, you've learned why Bitcoin exists, how it works, why it keeps increasing in value, and you've learned how to get involved. So that's it, guys.
Thanks.
Thank you for hosting.
Thank you.
Does anybody have questions? Yeah, you're welcome.
Thank you.
Oh, yeah.
Also, I have a question.
Sure.
What do you think that people could do to make cryptocurrency more available for merchants in the real world? Like, if I want to buy gas, for example, I think I should be able to buy it using cryptocurrency. Like, a lot of places don't offer that option.
Yeah, so I think that what it's going to require the big payment processors to get behind it. Stuff like Square. Square is very popular among merchants. Like, say you go and get your nails done, and this is racist, but it's actually true. Like, say it's a Vietnamese person, they typically, like, that's just a fact. Like, they're in the nail space. They pull out their phone, they've got that Square, you swipe the wallet. So companies like Square, Visa, PayPal, they've got to get behind it in regards to setting up the currently existing infrastructure for payment processing has to support Bitcoin. I think that's what it's going to take to get the majority of businesses behind it.
So, like, when I'm spending coins, I use Coinbase.
Right.
And then it just directly connects to the Coinbase, I guess, app or API, and then it like transfers it from Coinbase to the merchant directly. That's how I do it.
Okay, yeah. That's legit.
And okay. Yeah.
So, okay, I've delved in-ish the area of Bitcoin mining, specifically in the algorithms that are used for authentication processes. And so I've always kind of stayed out of Bitcoin until, I'm actually seriously going to get invested into it. But something that you said that was new to me that I found really interesting was the fact that, as it gets harder to mine over time. That was one of the things.
Right.
And the fact that miners get less as they mine over time. So one of my questions is, can it go back the other way to where if, like, let's say suddenly, this is too much effort, it costs me too much to do this mining or to keep these devices running, and so I'm not going to do it anymore. Can it go back the other way to where the miners start getting more of a reward if that becomes the case? Like a smaller swarm, stuff like that? Right,
that's an excellent question. I think the answer to that is no. I think the blockchain, the entirety of Bitcoin, if you look at my screen now, I'm looking at the Bitcoin halving article where all of Bitcoin will be mined by approximately 2140. So there's an end to this boom. There's going to be a time when all Bitcoin is mined. So if the miners are getting paid more, you'll hear about it because the code base for Bitcoin is open source. Like, all this stuff is like the white paper for Bitcoin, the code base for Bitcoin, it's literally public information. So I would say that it's very highly unlikely that the miners are going to be getting paid more, especially because it's going to create deflation in the price. So no, I don't think so. And just to add to that, all Bitcoin will probably mined out by 2140.
So another
okay. No, you can go.
Yeah, so another question that I have is in the encryption process with basically, the idea is that I perform a transaction and then, there's a rush to see who can validate that transaction, correct? So that's kind of how it works in a degree. And then there's a reward for whoever gets there as the first validator of that transaction.
Right, yep.
To confirm either end. So those individuals who are confirming those transactions, they're rewarded proportionally to like however many transactions, they confirm. And that Bitcoin is air quote generated there?
Yes, yeah. So the blockchain rewards the miners with brand new Bitcoin generated for encrypting the transaction and verifying both sides that everybody is who they say they are. They actually have the Bitcoin. So I don't know if I'm answering what you're saying.
Well, so here's been the loop in the system with that kind of method. I'm aware of this method, and I've thought of these, so it's fun to ask. If I just set up a transaction process between me and a friend, and then somehow I have the fastest way of confirming that transaction process,
right.
And then I create a loop. It's like, does the miner just sit there and get rewarded, basically as many times as he can confirm that loop? Like, does it dump currency into the system? Because if it's all mined out, then it's like, where are they getting
Yeah, so that's the reason why it becomes more difficult over time. So there are things called Bitcoin farms. Like there are images of specifically Ukraine Bitcoin farms, because there are people who have specialized in. They create specific computers for mining Bitcoin. Like, look at this shit right here.
I know exactly what you're talking about.
Yeah. And
it's all because of a mathematical theorem that we can't refine these processes faster yet.
Right. Yeah. So.
Yeah.
So the whole purpose of Bitcoin is to prevent this is centralization essentially. What this image is showing is centralization of someone controlling the blockchain, and the entire idea behind the Bitcoin code base is to prevent centralization of one person being able to validate all transactions and giving them too much power. I don't know specifically how to answer your question, but I would point you to the 9-page white paper, because I feel like this was heavily considered in the creation of the Bitcoin blockchain. So I don't think I can answer your question, but I know that I don't know. I strongly suspect that Bitcoin has measures in place to prevent centralization of power of miners on the Bitcoin blockchain.
And then, so my greatest fear with Bitcoin is what happens when we come up with a way to refine the prime algorithm or whatever else it is that's used for the encryption process. Because that's the biggest threat that is faced in hardware cybersecurity, is if we can refine and make better algorithms, then suddenly stuff starts going sideways for a little bit.
Right.
Until someone comes up with something new.
Right. I'm definitely not qualified to give any further insight on this.
Does that turn you off?
Excuse me, I have a question.
Sure. Yeah. Okay. Yeah. I think Death was next.
Did you say before a minute that it will arrive to a point and it will drop?
What about a drop?
You said that Bitcoin will arrive to a point that it will drop. Before a few minutes when I joined.
Oh, that the Bitcoin price will drop?
Yeah.
So what is your question about the Bitcoin price drop?
Yeah, did you say that? The price will drop?
Yeah, so I'm publicly in a bet in the Get Money Club that by June of this year I am betting 0.005 Bitcoin that Bitcoin will drop back down to $19,000 by 6 months into this year. The reason why is because of my study of securities and how financial markets work, things don't go straight up. Like Bitcoin is not going to go to 40, like it's at 40,000 right now. It's not going to go straight up to $1 million. Like there's peaks and valleys. Like we're coming off of the great crypto winter where crypto was just struggling between $5,000 and $3,000 for almost 2 years. So do I believe that Bitcoin will crash? Yes, I believe all financial markets will crash. Just like we're coming off of a crash due to coronavirus in the American U.S. stock market. Yes, Bitcoin will crash. The answer of crashes in all financial markets is a matter of when, not if.
If, yeah. It's a matter of when.
The reason why bubbles happen is because at some point the buying stops. And when the buying stops, then the sellers get in control. And then once people start selling, like so, we're going to go into a little bit of a different territory. As a result of the Great Recession in 2008, there were stock market wide stops put in place to prevent flash crashes of the online stock market. So actually, I'm going to show you this. There was a flash crash of the United States stock market in 2010. So the 2010 flash crash was caused by automated trading, where the stock market literally lost a massive amount of its value over a short period of time, and as a result, they put what are called they put circuit breakers in the markets. So at the time, March of this year, I was doing day trading in the stock market, and I literally it felt like the sky was falling because coronavirus crashed, and literally I was in day trading Slack channels, and the stock market was dropping at 7% at market open every single day. And these circuit breakers were initiating for the first time in the 10 years of their existence. And so over the course of 2 weeks, the stock market wide halts were for 15 minutes. No one could trade stocks. Those were being initiated multiple times in the course of 2 to 3 weeks. It was I was I was freaking out, holy shit, this is what a crash looks and feels like. So, I don't know why I got into that. What were we talking about?
Bitcoin price dropping.
It will drop, yes. Believe that. I'm publicly betting on it. I'm betting that Bitcoin will drop back down to 20,000 in 6 months. Why? Because that's just the way markets work. But that doesn't mean I'm bearish. Like I said, I'm also a Bitcoin maximalist. Do I think Bitcoin will be worth $200,000 one day? Yes. Yes, I do. But I'm just talking, this is just technical trading. Shit doesn't go straight up. That's just a fact. Just, what's that?
I'm a Tesla.
I did a video on Tesla in the Get Money Club about my analysis of Tesla. I think that it is incredibly overvalued, but I'm not undervaluing the value of market euphoria. So I'm going to show you my technical analysis for Tesla. My technical analysis, so fundamentally, Tesla is making more money. From a fundamental factor, I think Tesla is an excellent stock in the sense that they've got new technology. They're making more money year over year. They became profitable about 2 years ago. Tesla is an excellent investment, but Tesla is trading at 2,000 times price to earning. The price of the stock is 2,000 is this Tesla? Yeah. So here's 1,700. The price to earnings ratio is completely astronomically high. So this is my official take on Tesla. I'm just some guy, by the way. I'm just some guy online. This is not trading advice. This is just some shit that I'm talking about. I am a investing enthusiast, and this is my take on Tesla. So let's look at the weekly chart for Tesla. Every time in the course of my 3 or 4 years of studying financial markets, when I see a security break out of its upper price channel, this is my definition of a euphoric stock. euphoric meaning that everybody's like, oh, Tesla this. Like the fact that we're talking about Tesla in a Bitcoin in a Bitcoin seminar means that the market is at euphoric highs. So so this is what happened with Bitcoin too. When you break out of that, stocks and securities typically trade in what are called price channels. Price channels meaning that it has an ebb and flow to its up and down price action. When it spikes past and high above its long-term ebb and flow of its price channel, while this is exciting, and Warren Buffett also said, you want to be greedy when others. This is Warren Buffett, considered probably one of the greatest investors of all time, a living legend. This is a quote from him. Be greedy. I see your question, Death, by the way. Be greedy when others are fearful, and be fearful when others are greedy. So when I see Tesla at all-time highs, and this is weekly trading. This is 5 days of trading history. Like it went from $721 to $880 and is at all-time highs. If I were to be in Tesla right now, I would have a trailing stop I'd be trading on the weekly charts, and I would just be, because it's completely overvalued at this point. I would just have a trailing stop underneath each weekly candle. So I would have a trailing stop there. I would have a trailing stop there, and I would just be riding the euphoria as high it can go. That's
It's also worth more than every other automaker combined.
right. That makes no sense. So fundamentally, it's a great company. Fundamentally, it has more value than it's actually worth currently. So what that means is that a correction is coming. Securities never go straight up. So if I were in Tesla right now, I think it's a great company. If I'm a long-term investor, I'm really trying to sell at the highest price possible. I'm going to be trading on this weekly candlestick chart. I'm going to just have a trailing stop. Like right now, I would have a sell order at $724. I would wait another week and I would raise that stop up higher and higher and higher. And then whenever the market crashes, they'll stop me out and that's done. And once it crashes, I'll be looking to get in at a lower price. So that is my official take, my completely amateur, unqualified official take on Tesla. All right, Death, are you concerned about Bitcoin volatility? No. So I'm also not a current investor in Bitcoin. So am I concerned? It boils down to if I'm a Bitcoin maximalist. Do I think Bitcoin will continue to hold and remain a long-term storage of value over time? Yes, I do believe so. So the price of it currently is not, so we can look at the Bitcoin chart as we're talking about it. So Bitcoin, look at this fucking chart. Look at this chart. This is stupid.
It's free real estate.
This is the Bitcoin chart. This price action is what's called parabolic. So parabolic, if you remember from your high school geometry classes, parabolic means it's a parabola. Like it looks like this. It is literally going straight up. It's starting to go straight up. Straight up, you can't sustain going straight up. At some point, it needs to come down. At some point, people are going to take profits. So am I concerned about Bitcoin volatility? Not really. I am concerned that I'm concerned that 80% of central banks are researching their own digital currencies. That's a quote from Jerome Powell, the chairman of the Federal Reserve. This is not a bullshit thing that I'm saying. This is coming from the horse's mouth. This is coming from a central bank controller talking about other central banks in his field. Like the US dollar being a digital currency is coming. The Chinese yuan being a digital currency is coming. So my concern is whether people will just dump Bitcoin eventually when we all convert to digital currencies, which is a matter of when, not if. In general, just disclaimer, Nils, I like to speak in absolutes. Take my wording with a grain of salt. I just like to say shit in a bold fashion. So when I say that when, not if, when Bitcoin crashes, when Tesla crashes, just know who you're talking to, okay?
Hey, Nils. So
What's up?
my issue with Bitcoin primarily is market manipulation. We had the same kind of issue when we used the gold standard back when we had decentralized banking, right, during the free banking era during the 1800s. And what you would have is you'd have people who would have all the gold. In this case, it would be like the majority of the Bitcoin, and they could use that to prevent more currency, more gold, more Bitcoin from being facilitated in the market.
Right.
For transactions. So my issue would be like if they see Bitcoin is actually going to give them less return on their dollar when they spend it, they're going to hold on to it and they're going to reduce liquidity in the market and it's going to reduce spending and cause austerity. Like that would be my main issue with like using Bitcoin. And that issue isn't necessarily solved just by centralizing either. Don't get me wrong, I'm not saying that's the case, but that is a poignant issue for me when it comes to Bitcoin. How do you feel about that? How do you feel about that kind of volatility and austerity that can be caused from Bitcoin becoming basically a de facto currency?
Yeah, so I have a similar concern in the sense that because there's no regulation on Bitcoin, I feel like people can sell Bitcoin even though it doesn't exist and doesn't map to an actual wallet. Because there's no governing body, like why can't Coinbase just start creating, so say there's only 21 million Bitcoin in existence, what if they just, if they don't actually have the Bitcoin, they just start selling you Bitcoin they don't have as if it's like, they'll get it later, right? Like I owe you.
Yeah.
I'm very, very deeply concerned about specifically that because there's no actual mapping to when you buy a Bitcoin on something like Coinbase or Binance, there's no mapping to do you actually own that? Like, does that Bitcoin actually exist? So my concern is similar in that way. Because there's no governing body, there's no way to verify whether your Bitcoin exists. I mean, I guess you could by actually viewing it on the blockchain. Yeah, you can look at it to see if your transaction exists on the blockchain to confirm that you actually have that Bitcoin. But my concern is you can get away with lying because the vast majority of the people buying Bitcoin are not savvy enough to confirm that their transaction is actually on the blockchain. So I have similar concerns with Bitcoin, but I also think about like just the long-term wisdom of speculative technologies like Bitcoin and things like that. All opportunity is a result of imbalance. Like I said, know who you're talking to. I'm going to be talking from a very confident, possibly arrogant perspective, which is all opportunity lies in imbalance. Like the reason why your food can heat up is because it's literally not hot, and you've got something that's hot, and the hot is going from the stove to the thing that's not hot. Like the reason why diamonds have values because there are certain, and the reason why oil has values because there are certain areas of the world that are flush with oil and other areas of the world that have no oil. And the reason why it has value and those areas of the world gain dollars as a result of their oil is the transfer from, and it's an inherent imbalance. So with that being said, what I'm getting at with that is Bitcoin is a speculative and risky technology. 1. 2, don't invest money that you are not willing to lose, especially with Bitcoin. Do not put all of your money into Bitcoin. Why? Because it's not secure. Like literally you could lose everything. Like legitimately, if your Bitcoin is on Coinbase and it gets hacked, you could lose everything. And that is a real concern. So I'm hedging what I'm saying by saying that Bitcoin is very risky. I agree with you. But the source of all opportunity lies in risk. If you're in the Get Money Club, you know that I gamble. I'm a poker player. I'm a semi-professional poker player. The result of all opportunity lies in risk. And you make money by analyzing what your reward, you analyze the risk to reward ratio. What is my level of reward versus my risk? For example, Bitcoin. How much money do you think Bitcoin's going to be worth? Is it going to be worth, do you think it's going to be worth $300,000? Let's just say $400,000 one day. That means your risk to reward ratio is 10 to 1. If you believe that Bitcoin is going to be worth $400,000 and you say you buy one Bitcoin, you invest $40,000 into it, your risk to reward ratio is 10 to 1. So is Bitcoin risky? Yes. Is the risk to reward ratio worth my risk? That is the question you must answer. How much is my Bitcoin going to be worth when I sell it? Say it's $400,000. Say I lose my entire investment, my $40,000. Is the $400,000 reward worth my $40,000 of risk? Can I take losing $40,000 with the possible reward of $400,000? So the answer is yes, Bitcoin is risky, but standard gambling theory has you do the analysis of your risk versus your reward. To further answer that, I'm literally in a situation where so we're going to go into like a weird direction here, which is I got a LinkedIn request recently. So I'm a software developer, and I got a dream job offer just now, literally like yesterday. I code in a language called Elixir. This is this cush job. I'll probably get paid $150,000 a year, and yet I own my own company. I have the ability right now with my own company to be a millionaire in the next 3 to 5 years because I have some plans for some products I want to come out with, and yet I have the siren's call, right? I have the opportunity to get this cush job where it's remote, it's going to be just 40 hours a week, and I can just chill my way to $150,000 a year. Or I can eat shit where I'm like what I'm doing right now. I can eat shit, pay like right now I'm paying myself $50,000 a year. So what is my risk to reward of owning my own company and building my own business, or taking this LinkedIn request and going and getting a cush job and making triple what I'm making right now? So that's essentially, it's like the red pill versus the blue pill. That's the situation I'm in literally right now, which is, gosh, man, I'm like busting my ass with the potential of having my own freedom versus, man, I can just slave away for just 40 hours a week and make someone else rich. And like, that's the situation I'm in, which is, how much am I willing to bet on myself? Do I believe in myself to the ability where, like, am I going to quit now and take that $150,000 job? Or am I going to freaking buckle down, continue eating shit, and really bet on myself? That's the situation I'm in, and that's what I encourage you to analyze. Yeah, right. So someone just said I would quit in the chat. So that's what it boils down to. Do you think Bitcoin is worth the risk versus is the reward worth the risk?
Well, Nils, hang on. Before you go on to that, because I actually have a question that ties into that. How do you feel about, like, because as you know, Bitcoin inflates in prices due to major events that affect the economy, or when, in the case of 2017, when huge sharks come into the market and they buy up all the Bitcoin and artificially inflate the price. Do you think that makes Bitcoin still worthy investment, knowing that only major events are going to cause it to grow exponentially like this, and then once those events kind of pass, because the recent increase in prices due to lower liquidity of the USD because we printed like a quarter of the entire M1 money supply this year. Do you think those events being directly tied to how much Bitcoin is actually inflating makes it worthy as an investment, given the fact that you don't know when those events are going to take place?
Bitcoin halving. That's why Bitcoin has value, not these outside forces. The reason why Bitcoin has value is because miners are required to put more computational power to conduct transactions, and they get paid less per transaction. And there's only 21 million Bitcoin in existence. Bitcoin has value because it maps to real world energy, one, and because it's a scarce resource, and number three, it becomes over time more difficult to mine Bitcoin. So the events that you're talking about are related, but the more important event are these Bitcoin halving events, where the miners on the blockchain get paid less and less over time. Bitcoin has value because of the Bitcoin halving events.
Yeah, but I'm talking about like hyperinflation of the price, like we're seeing this year. Like, obviously, most people buying Bitcoin, they want to buy it because they're like, well, it's just going to keep going up. Right? I'm going to make a 500% increase on my initial down. But I'm saying, like, that's not the case. Like, people who are buying Bitcoin expecting it to just like expand rapidly overnight, I think a lot of them don't realize that those are the result of the market of Bitcoin being manipulated somehow, whether it's through the increase of the USD supply or the increase of people buying Bitcoin within a very short period of time. Like I'm saying, what would you say to people who are buying Bitcoin expecting it to grow like 500% in a year?
That's a good question. Like, for example, if I'm buying, I've been encouraging, because a lot of people in the Get Money Club have been talking about, they've been talking about Bitcoin and crypto, and I've really been encouraging people to wait. Like, you don't want to buy at tops. Like, I made this mistake. 3 years ago. I bought at the top, and I got screwed. Like, the crash is coming. So it boils down to, where do you think this thing's going to be worth? And I don't really know how to answer your question directly. I only know how to answer it esoterically. My esoteric answer is, you want to be buying when nobody's talking about it.
Yeah,
like,
buy the dip.
What's that?
Buy the dip.
Yes, like, and that's hard. That's like, it's easy to say, but you have to be like, I don't know. I'm keep talking about Get Money Club, but I spoke about, like, I can show you my transactions. You know what? Fuck it. I'm gonna show my transaction history. I bought Bitcoin at the fucking bottom this year. Of course, I sold. So somebody was shitting on me in the Get Money Club recently because I sold it for a small profit. I sold it for like a 20% profit. But I bought Bitcoin at like $5,000 earlier this year. Coinbase. Actually, I don't have to prove it. It's like, it's in the fucking Get Money Club records. That I bought Bitcoin. If you scroll up, it's in there. I bought Bitcoin at like 5,200 or 5,000. Like, I think I bought it at 5,200 and I sold it like 6,000 or something like that. Fuck, I don't know. I don't remember what the question was.
Well, because like my thing is, because even if you buy the dip, you don't know when those major events are going to take place. You don't know when market manipulators are going to come in and buy a shit ton of Bitcoin and make it look like it's surging in price.
Right.
You know, it's like just a one-time purchase. You don't know when a coronavirus is going to come and hit the economy and we got to print out, I don't know, like $5 trillion in M1. You know, like, you don't know when those events are going to happen that are going to hyperinflate the price. So, like, personally, I would caution people against buying Bitcoin if they expect it to just rapidly grow, because you don't know when those events that cause it to rapidly grow are going to happen. And, like, I'm wondering if you feel like the same way. I'm not saying people shouldn't buy Bitcoin. I'm just saying, like, people shouldn't buy it with the expectation that it's going to, like, inflate 500% in a year on any given year.
Yeah, so I think this was a more valid argument when Bitcoin was worth less. Like, when it was worth like $21 billion or 500, like, we're approaching a market cap of $1 trillion. I've got this pulled up on my screen right now, where Bitcoin is worth $750 billion right now. As it takes more money to acquire a Bitcoin, the opportunity for so the global crypto market, I'm looking at this on this coinmarketcap.com. The global crypto market cap right now is 1.1 trillion. I think you have valid concerns. Like, I really like the fact that you're approaching Bitcoin from a bearish first perspective, because Bitcoin is very highly manipulated, and you can clearly read it on the chart. Like, the fact that you just see all this selling at random times and buying at weird places, like,
And, like, don't get me wrong, Bitcoin will always continue to go up. I'm not saying that it's not a good investment. I'm specifically talking about people who expect it to grow like 500% in a year. Like, I'm talking about people who think it's going to, like, hyperinflate. I'm not a bear when it comes to Bitcoin. I think people should buy. I think it's a good long-term investment.
Okay.
I'm referring to people who expect it to, like, balloon like Tesla has, or balloon obviously like Bitcoin has this year.
You got to hold on. Yeah, no, this is, you literally got to, if you're going to buy Bitcoin, you need to be willing to be underwater by like 40% at multiple times in its life cycle. I mean, it's actually more than that. Literally, it peaked to 20,000. It peaked to 20,000 and it dropped all the way. I'm looking at the chart right now, and it dropped all the way to $3,000. It lost 90% of its value. Like, you just, if you're going to buy Bitcoin, you really got to not be in it for, I mean, you're in it for the money, but you got to be in it because you fucking believe that it's going, like, you've got to believe that it is a game-changing technology. And the reason why you have to believe is because you are going to be underwater 50% plus at times. And so the only thing that's going to keep you in is your belief that, holy crap, this thing really this thing is going to change the world. Not only is it going to change the world, it already has changed the world. You have 80% of central banks in the world actively researching, digitizing their currencies. This is a game changer. So if you're going to buy Bitcoin at 40,000 and you're going to sell it at 20,000, I'm sorry, but this is not for you. So, like you said, there are so many things against Bitcoin. The fact that the digital currencies are coming for fiat currencies. The United States dollar as a cryptocurrency is coming. The euro as a cryptocurrency is coming. That's why you need to limit your risk to this thing. You should not be putting everything into Bitcoin, because it not only is it it's super volatile, but the powers that be could, well, that's not necessarily true, but I just like the fact that you're bringing up all these bearish scenarios, because this is not a freaking gravy train. Like, this is not a game. I'm someone who's a Bitcoin maximalist, and I lost thousands of dollars in Bitcoin because I was an idiot. And I'm trying to prevent you guys from being idiots like I was. Buy the bottom, buy when nobody's talking. Like right now, the fact that we're having this seminar, this is not the time to buy. This is the time to sell. You need to be, when people are crying, when there's blood in the streets, that's when you buy. When there's blood in the streets, that's when you buy.
Nils, let me get one more question with you. I'm sorry to bug you, but do you think Bitcoin would still have inflated in price this year if we hadn't used the quantitative easing as a result of COVID? Do you think we would still be seeing this bubble right now?
That's a good question. So anybody in the chat, quantitative easing is a euphemism for printing money. Money printer go burr. Trillions of dollars were printed. When we talk about trillions, this is a number this is a phrase that we just weren't saying 5 years ago. Like Apple becoming the first $1 trillion company. It's amazing that we're talking about trillions in the modern world. But that being said, the reason why Bitcoin is spiking does have external factors. It's because of the Bitcoin halving event in May 2020. The miners were rewarded. The Bitcoin halving, that's the answer to all these questions. The reason why Bitcoin has value is because it becomes harder and harder to acquire and create Bitcoin over time. May 2020 is when this all started. Like, if we can look at it on the chart. May 2020, that's when Bitcoin stopped dropping in price. May 2020, I don't know if you're looking at my screen right now, but literally it stopped dropping at that point. And that's when it started spiking. And you can map Bitcoin's price to every halving event, and you can see the spike in Bitcoin's price. Every single Bitcoin halving event resulted. What's up?
What is a halving?
A Bitcoin halving event is when the Bitcoin miners get paid less. So when you're conducting a Bitcoin transaction, you're going to be on the blockchain, right? Essentially, it's publicly available information. To get put on the blockchain, there's people who are sitting on the blockchain called miners, and they have to confirm and verify your transaction. As a result of using their computational power to verify your transaction, they get paid. The blockchain issues them brand new Bitcoin, a little bit of Bitcoin as a result of that transaction. A Bitcoin halving there have been 3 Bitcoin halving events. When Bitcoin halving events happen, the miners get exactly half the previous reward that they got before. Before, Bitcoin miners were getting paid 10 times what they get paid now in the amount of Bitcoin created.
It's like the half-life of their money.
What's that?
It's like the half-life of their money. Of the money that the miners are earning.
Yeah, it's a half-life. Yes, exactly. It's a half-life for the reward for conducting transactions. And so every spike in Bitcoin's price has come on the backs of a Bitcoin halving event. Here's the chart. Here's the freaking chart. It's right there. Public information. So yes, I think quantitative easing. So as the first time that Bitcoin showed a mapping, a direct correlation to the economy at large was in the baby crash of Christmas 2017. That was the first time that Bitcoin showed a direct correlation between the global markets and the cryptocurrency markets. Before it was almost like a completely independent entity. So with that being said, yes, quantitative easing does have an effect on Bitcoin, but the most primary catalyst for the Bitcoin price are the Bitcoin halving events. So yes. Someone asked, Nils, can you talk about buying altcoins like Ethereum or Litecoin? I feel there's an opportunity in altcoins. Yes. So when you get into the Bitcoin space, like say you go on Coinbase, you turn your fiat currency, like fiat meaning actual paper currency, Australian dollar, Great British pound, you turn that into Bitcoin. You can actually transfer your Bitcoin. Actually, you can do this on Coinbase. Coinbase actually has crypto to crypto exchanges. I think most altcoins are going to zero. There are thousands of cryptocurrencies. I think that when the dust settles, there probably will be like 5 or 10 or less cryptocurrencies that do not go to zero. Most altcoins, this is my opinion. There's a lot of people who will disagree with me. Most alternative cryptocurrencies that are not fiat currencies are going to zero. The reason why is because the reason why I don't think Bitcoin is going to zero and will survive. So I personally like Litecoin. Litecoin is it's also the Bitcoin code base. It was forked like on. I don't know how deep to go into these things. When you fork, here's what a fork is. On GitHub, like literally, I can literally on this call, I can start coding against Bitcoin in public right now. So let's just go to Bitcoin. Bitcoin/Bitcoin. Here's what a fork is. When you hear the term fork, on GitHub, there's a concept called forking. I can fork this repository. I've actually already done it. So I can fork Bitcoin. What that does is it copies the Bitcoin code base, and I can literally start coding against it. So a lot of cryptocurrencies are just, so now here's my company on GitHub, or equals, and now I actually have a version of the Bitcoin code base. I can now clone this to my computer, and I can change the blockchain from issuing 21 million Bitcoin to 42 million Bitcoin if I wanted to. And then I can issue my own cryptocurrency and start Bitcoin from zero all over again. So a fork is how typically, a fork of Bitcoin is how many of these cryptocurrencies are created. With that being said, I think that there are a few cryptocurrencies that have inherent value, like Litecoin. Litecoin, they came out with the Lightning protocol that makes Bitcoin transactions much faster, because Litecoin is an alternative cryptocurrency that is a fork of the Bitcoin code base. I just showed you what forking was. You literally just copy the code. There's been a lot of innovation in the Litecoin space. One of my concerns with Bitcoin is that there's not a lot of innovation in the Bitcoin space. Very few people are actually contributing to the Bitcoin code base. So that's just another bearish indicator for if you want to be bearish on Bitcoin. That the fact that very few people are writing code against the Bitcoin code base. With that being said, alternative coins like Ethereum clearly has a bunch of value. So you got, like you guys know, I am a gambler. I'm a poker gambler. There's a company called Virtue Poker. They have online gambling, and they pay you in Ethereum. Virtue Poker is a decentralized poker platform that uses the Ethereum blockchain. So instead of getting paid in money, like fiat currency, you get paid in Ethereum. Like the Ethereum cryptocurrency was built for like expansion and being coded against. My opinion on altcoins is that the vast majority of them are going to zero. It's not worth, in my opinion, investing into any altcoins. Lots of people will disagree with that opinion. The reason why I like Bitcoin specifically is because, and this is me this is the businessman in me that I'm about to get into. Bitcoin has what's called brand power. When people talk about cryptocurrency, they talk about Bitcoin. Everybody in the world knows what Bitcoin is, but there are far fewer people who know what Ethereum and Litecoin is. It's like Nike. It's like buying Jordans. I'm trying to think of other brands that have incredible value.
Supreme with their brick.
What's that?
Supreme with their brick.
Exactly, Supreme, right? I heard about Supreme recently.
Brick for $30.
That's what brand does. Brand actually maps to real world value. Coca-Cola is actually probably the landmark example. The Coca-Cola brand is the reason why, even though Pepsi tastes similar and it's also made from the cola nut, there are many people who will never buy Pepsi because of their loyalty to the Coca-Cola brand. Bitcoin has value not only because of the Bitcoin halving events and because it's scarce. The reason why I'm a Bitcoin maximalist also is because Bitcoin has brand power. It is the flagship of cryptocurrencies. And when Bitcoin's, and this is my experience from day trading cryptocurrencies about 3 years ago. When Bitcoin spikes in price, all of the altcoins reduce in price. Like it's the king. It's the everybody bows. All the altcoins bow to Bitcoin, and so that's the reason why I'm not a big believer in altcoins. I am a big fan of Ethereum and Litecoin in general, but in terms of a long-term store of value, personally, I'm only investing in Bitcoin. The reason why is because Bitcoin has the strongest brand, and it has the most traction, and that's not going anywhere. That's it. If anybody has anything else, say not, speak now, or forever hold your peace.
How would you improve Bitcoin within itself? Not you specifically, just like let's say Bitcoin needs to be improved in the future. Its code. How would you do that without becoming altcoin?
Yeah. So the way you do it is because it's open source. You can do what's called a pull request in the coding communities. A pull request, say you see something sucks, but you have to be a developer, of course. Say you see something sucks in the code base, you can do what's called a pull request, where you can say, hey, user help and argument parsing improvement. This is we're looking at a pull request right now. User help and argument parsing improvements. Because it's open source technology, you can literally write code to improve the code base, and you can do a pull request to the Bitcoin trunk branch, and you can say, hey, I've improved the code base, merge my pull request so that Bitcoin all works with this improvement.
I don't know anything about this. That's all I'm asking.
Who's in control?
Yeah.
That's a good question. I don't know.
It's decentralized, so.
Right. Yeah.
Who accepts these things or denies them?
Yeah. I don't know who is in control of the Bitcoin code base.
So there is someone in control then.
Yeah, someone is. There are multiple people are organizers on the Bitcoin GitHub organization. It's these 27 people. These 27 people are in the GitHub organization for Bitcoin. So, but it's also open source, so it's protected in the sense that if bullshit gets in there, someone's probably going to see it. Probably. So, Sari says, how would a stock market crash affect Bitcoin? That's an excellent question. There was a time for the majority of Bitcoin's trading history that the crypto markets were completely independent of the real world markets. But like I was saying earlier, December 2017, during the very small crash of Christmas 2017 of the stock market, it was a baby crash. That's why nobody, unless you were in that world, you probably didn't hear about it. Of course, everybody knew about the coronavirus crash because it was a significant crash. But the baby crash of December 2017, it existed in the stock market, and it also existed in the crypto world. So that was the first landmark event where we saw that cryptocurrency markets were trading in lockstep with the fiat markets, the real world markets. So a stock market crash will affect Bitcoin as it did in the crypto, or not the crypto, we can confirm this because we can map this. This is March 2020, February, March 2020. Bitcoin crashed in lockstep with the stock market as it crashed as a result of the coronavirus crash. So the answer is stock market crashes affect Bitcoin crashes with a high degree of correlation. Is it 1-to-1? I don't know if it's one. It's definitely not 1-to-1, but they're highly correlated. Well, I'm getting tired, guys. I'm starting to get a headache from talking and issuing my spew.
Do you do any Bitcoin mining?
I do not do Bitcoin mining, but I actually have mining equipment at my house that I bought like 2 years ago that I haven't set up, and I want to get into it. It's a project that I want to do. So, no.
I've just checked the prices, and I checked them last month, and now obviously because it's gone up so much, I can make £100 a month just with my gaming GPU.
That's legit.
It stays the same.
Yeah. Yeah, man. Well, all right, guys. I think I'm gonna cut it here. It was fun.
Thank you.
I'll still be watching the chat if anybody wants to chat me anything. The How to Crypto chat. So.